This is an in-depth guide to figure out how to fill out your T2125, your business income for a sole proprietor. So you'll go in, you'll put in the T2125, and we're going to go through every single item here to make sure that you understand how to fill this out correctly. So your business name, not necessary. If you have one, you can input it. If you don't need to. Your GST or HST number. This depends on whether you are already collecting GST. In the previous video, I told you about the rules related to the GST. Pretty much, if you make 30K or more than a year, you'll have to start collecting GST on any amount over that 30,000 for that year. And then you would apply for this GST HST number. So take a look at that video. That was just a simplified explanation there. But you will need a GST HST number based on your revenue, okay? And in the year, once you start hitting more than 30,000, that's when you have a GST HST requirement. What kind of money do you earn? You'll have to figure out whether you earn business, professional, or commission. Generally, for most of you, it'll be business unless you are a professional corp, such as a lawyer, doctor, accountant, etc. like that. If you're not sure, you can find the definitions here using the Wealthsimple app, and they will tell you and describe every single type of business, professional, or commission. Is the income related to property flipping? Probably not, unless you are a property flipper. Again, that there are special rules related to that you can just click on and find out. Does this business have its own address? Probably not. If you are a sole proprietor, is this a partnership? Maybe you're working with someone else. If not, you'll put it as no, and you'll have your fiscal period. What's your main product or service? That's where you're going to write down what it's for, what is it that you do as a sole proprietor. And you'll need to go and search for this as well. And you'll find other management consultings, the industry code. So you need to input an industry code closest to what you're doing. Now, when you're looking at your income, you have two things you need to look at. Your income and your expenses when you're inputting your actual information. So your income has your gross sales, commission, or fees. So this would be, if you made 25,000 in a year, you would input 25,000 there. Returns, allowances, and discounts. Anything where you had an amount that lowered that, if there were any returns there, would input that. Do you have any other business income? So most of the time you'll just leave it as gross sales, commission, or fees. And then you'll go down here to find your cost of goods sold. So anything directly related to the product that you're selling. If you're manufacturing, you can have direct wage costs. If you are providing a service, you can have subcontractors. There's not a lot of explanations here. If you have direct wage costs, so people working directly on the product or service, you'll input that here. Any subcontractors, maybe you employed someone else for a contract to do some work, you would include that as well. Any amount here will lower it. So if we have subcontractors of 1,000, now our gross profit is at 24,000. So you can see this cost of goods sold section will be just related to your product or service, the actual cost of creating that product or giving that product or service. Now, when you go down to your expenses, here are all the expenses listed that you may or may not have incurred for your business. You can only include expenses related to business income. So all of these expenses must be for the purposes of your business. So advertising, if you had advertising expenses, you can input that amount. Maybe you had $500 of advertisement. That can be running Facebook ads, any type of advertisement that you spend money on. Meals and entertainment is generally considered if you have any meetings with clients and you end up, paying for the meal. So that was for business purposes. You were trying to maybe sell them something. Then meals and entertainment are allowed. They are only deductible at 50% of what you spent. Okay, so for $1,000, the tax deduction will be only $500. Bad debt is any receivables that you had but you will not get, so you will not be able to collect that. Then you can also write that off as well. Insurance, any type of insurance that you pay, maybe you have insurance for your work, for your building, etc., anything like that for your business, then you can pay for your insurance. Interest, this one is most likely if you have a loan outstanding for your business. So let's say you took a line of credit in your business and there's interest that you're paying on that, then that would also be deductible. Business tax, fees, license dues, membership, and subscriptions, anything related to any of these subscriptions, fees, business taxes that you pay, you can deduct that as well. Office expense, if you had anything related to the office, this is very close to supplies as well. That's used up within the year. They're very low. Maybe you bought paper, pens, all that sort of stuff. You would input it either in your office expense or supplies. Legal, accounting, and other professional fees. This as well is important. If you had any legal accounting fees, you can deduct that. Management and administration fees. So if you, for whatever reason, had a management company, anything like that, then you could also deduct that. And rent is if you have a building, then you can also deduct the rent for that building for your office space. Maintenance and repairs, that would be more related to, again, the building, if you had any maintenance and repairs there. It could also be for any product that you have. Let's say you have maintenance and repairs on a machine that makes your product. You would also include that there. Salary, wages, and benefits. Have you paid anyone out, yourself included? Anything related to salary, wages, and benefits of you or anyone else, you can include that there. Property taxes, travel, again, business-related travel. Maybe you had to travel to a client's destination, then you would include that. Property tax, again, would be on your space. You had a actual office space that you're paying property tax on. Telephone, if it's only business-related. And utilities, gas, water, that's if you have an office space. Fuel costs, except for motor vehicles, so any fuel costs but not related to motor vehicles. Delivery, freight, and express. So if you had any kind of shipping expenses there, you can include that here. Then we'll go down to the other one. So here for your motor vehicle expense, you actually have to calculate it. So you'll press this arrow button. You'll go, I need to calculate them. And you'll just go in and input this. So you'll put in what your make and model was. Maybe you had a Lexus. Then you tell how many kilometers you've driven in the year. You drove 2,000. 500 was for business purposes. Now you can take 500 of that, 25%. There's a huge description of all your expenses. So if you had fuel and oil, interest, insurance, registration, all of these are very, very, very easy to know. Allowable motor vehicle expenses. So if you wanted to claim CCA on that, you could as well. In general, you'll go through and you'll input all this information and you can find that it changes. So now it'll be a slight change. We can go to our CCA and we can calculate it as well. If you had any additions of or dispositions, you would include it in this part. So maybe you had an addition of equipment. That's if you purchased it. You have to go on CRA's website and find what class it belongs to. And then you'll input this RIIP or AIIP just based on whether you purchased this equipment either before 2025 or after 2024. And you can go through here. It'll say total cost or proceeds. You'll input how much you paid for it. And again, if you had a CCA schedule moving on before, in the prior years, you'll just go in and you'll input that here so it can do the CCA calculation. So your UCC start is your UCC end of your prior year, which you'll be able to find. Okay, and then things are quite simple there. Not really difficult in terms of that. Final thing to talk about is your business use of home expenses. You'll say how much was the area in your home and how much was the area for your workspace. You can only deduct it if it's your principal place of business or you only use it to earn income and you use it to meet your clients. And then there's a whole laundry list of things that you can deduct based off of what expenses you may have, and they're very, very simple here. The only one I'll talk about is the mortgage interest. Make sure that you don't have the mortgage principal as well in the payment. You can only deduct the mortgage interest in Canada. None of this is very difficult. It'll just be prorated on the percentage. So here it would be 20%, for example. Any fee, you'll see only $200 will be what will be deductible because it's prorated. So you have your motor vehicle expense you can calculate and just input all the numbers related to your vehicle. You can also decide whether you want to take CCA or not on the vehicle. Again, if you want to do the CCA calculation as well, because you have capital property, you can. You have your additions and dispositions here, as well as if you have a CCA calculation from the prior years, you'll input it here. Business use of home, depending if you have any space at home that you use for your business, you may be able to deduct that as well. These deductions are prorated for the percentage use. Remember, this is general information, not personalized tax advice. If you do like this video, make sure to like and subscribe for more practical Canadian tax guidance videos.